One of the biggest draws on liquidity you will ever rely on are daily gaps. I'll run through recent price action on ES on a daily time frame and show you how reliable this is as a draw on liquidity, which gives you a very clear bias for the day. So first, let me explain what a daily gap is. So if a daily candle closes and we have a distance between the previous candle and the current candle wick which closed, this gap in between is often known as a gap. And as price travels away from that gap, it will often come back, fill this inefficiency before then continuing in the overall direction of the higher time frame trend. Price now is efficient because all wicks have filled bodies in price. So let's play price forwards and I'll show you examples of every time the daily has given a gap in price, it very soon after is filled. This daily gap has filled the very next day, creating in itself a new daily gap. We also have a bullish trend and a market structure at the top, which has been swept. You can expect the very next day to be bearish and become efficient. It fills the gap straight after breaking all-time highs. Price is now very efficient, which means it's going to create a new structural high and likely in an impulsive manner to create a new daily gap. Let's see. Price continues to consolidate sideways before breaking to the upside. It was impulsive and it did leave behind a daily gap. Let's see how soon price comes back to mitigate or fill this gap. I'd class anything above 50% a mitigation. Not every time is 100% of a gap filled. You can see in this case, 50% of that gap was mitigated. Price is very efficient, so we can expect new gaps to be produced. Price came back again to take around 80% of that gap. Let's see if we get a continuation to the upside, which we do. A very impulsive candle with an even larger gap. How soon after is this gap going to be filled by future price? There we go. An excellent draw on liquidity, which you can trade into on a 4-hour or below before 100% of that gap is completely filled. Now, it runs into a daily low and instantly stops, but what it leaves behind, I'm more interested in. This gap is left behind at the daily close, so it wouldn't surprise me, especially in a bullish market, if price reversed instantly, targeting that immediate gap fill. There we go. Price is now efficient once more. We have no gaps on the way up. If we trail back, we are in a bullish market, so we expect new structural highs to be created. Let's see how price moves. Very efficient, travels all the way to the structural high, and only when it reaches that structural high does it leave behind a new daily gap.